Right now, a civil war is raging on Wall Street. The prize? $1 trillion. Today, Tesla shareholders are casting the final votes in the most insane executive pay deal in corporate history. A compensation package for Elon Musk so massive it could make him the world's first trillionaire. Or if it fails, could cause him to walk away from Tesla forever, potentially crashing the stock. The board says without this deal, Tesla dies. But some of the biggest investors on the planet, including a nation's sovereign wealth fund, are screaming no, calling it a robbery in plain sight. So what happens to your money tied up in Tesla stock when the dust settles? In this video, we are doing a deep financial breakdown of this trillion-dollar gamble. We'll expose the Mars shot goals Musk must hit, who wins and who loses, and what happens to the stock tomorrow. Stick with me. All right, let's cut through the noise. To understand what's at stake, you need to know what this vote is really about. And by the way, I've broken this entire analysis down into chapters, so you can jump to any section you want using the timestamps in the description. But trust me, you're going to want to see how this story unfolds. So what exactly is this trillion-dollar deal? First off, Elon gets zero salary, zero cash bonus. His payment is 100% performance-based. If he succeeds, he could get a grant of over 423 million shares. With Tesla's current number of shares, that represents a 12.7% dilution. That means your slice of the Tesla pie gets smaller to make his bigger. If he gets all of it, his ownership of Tesla would rocket from around 13% to nearly 28%. This payout isn't a lump sum. It's broken into 12 separate pieces or tranches. Think of it like a video game with 12 increasingly difficult levels. To unlock the first level, he has to grow Tesla's market value to $2 trillion. Right now, it's at about $1.43 trillion. After that, each new level is another $500 billion in market cap, all the way up to a mind-blowing $8.5 trillion to unlock the final tranche. Just to be clear, getting from today's value to that $8.5 trillion finish line requires the stock to appreciate by over 468%. It is an absolutely monumental task. So the question becomes, is he worth it? This is where the civil war begins. Let's start with the case for the package. Musk's supporters, like billionaire investor Ron Barron, say that without Musk's relentless drive, there would be no Tesla. And he has a point. If you invested just $1,000 in Tesla back in 2014, you'd be sitting on around 20 times that today. The argument is that you're not paying for a manager, you're paying for a visionary, a force of nature who slept on the factory floor during production hell to save the company. The Tesla board, led by Chair Robin Denholm, is even more direct. She has warned shareholders that if this vote fails, they run the risk of Musk dedicating less time to Tesla or even leaving altogether. This is the key person risk, and it's very real. Remember what happened to Tesla's stock when he was distracted by the Twitter acquisition? It plunged 65%. His focus is directly tied to the stock's performance. This package, they argue, is an insurance policy to keep him laser-focused on Tesla for the next decade. Now, before I tell you about the powerful group of investors who are calling this a complete scam, I have to ask, based on that argument alone that Musk is Tesla, does he deserve this? Let me know your gut reaction in the comments below. Yes or no? Don't worry, there's a lot more to this story. All right, now for the other side of the war. Some of the biggest and most respected investors in the world are voting no. The most powerful voice is Norway's sovereign wealth fund, the largest in the world. They're voting against it, citing the excessive size. And they're not alone. The two most influential proxy advisory firms, ISS and Glass Lewis, who guide how trillions of dollars are voted, have both recommended their clients reject the deal. Their argument is simple. The sheer size is unprecedented and unjustifiable. We're talking about a potential $1 trillion payout. For comparison, the CEO of NVIDIA, a company with a much larger market cap, has an ownership stake of 3.5%. Tim Cook at Apple has a stake of around 3%. If this deal goes through, Musk would control around 28% of Tesla. This isn't just a pay package, it's a transfer of power. Their second killer argument is that this deal actually increases the key person risk instead of solving it. The logic? If you make a man a trillionaire, what financial incentive does he have to keep working? He could walk away tomorrow with more money than God and pour all his energy into SpaceX and XAI. By giving him everything, you might just be giving him the freedom to leave. Finally, and this is the most critical point for investors, they point to the massive 12.7% dilution. This isn't just a number, it's a direct reduction of your ownership. Every share given to Musk is a tiny piece of your investment gone. Even if Tesla's stock goes up, you capture less of that upside because your slice of the pie is smaller. This brings us to the most insane part of this whole story. The goals he has to hit aren't just about the stock price. The operational milestones are so ambitious, Wall Street analysts have called them Mars shots. To get his full $1 trillion, it's not enough for the stock to just go up. He has to fundamentally transform human civilization. I'm not exaggerating. First, the financial goal. Tesla needs to reach an annual adjusted EBITDA, that's basically a measure of profit, of $400 billion. Let me put that into perspective. Tesla's current annual EBITDA is around $13 billion, so he needs to increase profits by almost 30 times. The entire global automotive industry, Toyota, Volkswagen, GM, Ford, all of them combined, makes about $180 billion a year. Musk has to make Tesla more than twice as profitable as the entire car industry. But how? Well, here are the product goals. First, he has to deliver 1 million Tesla bots. Yes, humanoid Optimus robots, not prototypes. 1 million commercial units sold and delivered. Second, he has to operate 1 million robotaxis commercially. That means a fleet of 1 million self-driving cars on the road, picking people up and generating revenue. These goals are so far beyond what any company has ever attempted. He's not just betting on building more cars, he's betting on creating 2 entirely new, multi-trillion-dollar industries from scratch. Achieving these goals would justify an $8.5 trillion valuation. But the risk is astronomical. So here's the trillion-dollar question. What happens to your money tomorrow? Let's analyze the 2 paths. First, let's say the vote passes. In the short term, you'll likely see a stock rally, maybe a 4 to 6% pop. The market loves certainty, and this removes a massive question mark about Musk's future. But long term, it means shareholders are betting on Musk to achieve the impossible again. The fate of your investment becomes completely tied to him hitting those Mars shot goals. If he does, everyone wins big, even with the dilution. If he fails, the stock will stagnate or fall, and your smaller piece of the pie will be worth less. But what if the vote fails? This is where it gets scary for Tesla bulls. The board has been very clear. Musk might leave or dedicate less time. If that happens, expect a significant, immediate stock drop. We could see a 10 to 15% nosedive on the news with the potential for it to fall much further as the market reprices Tesla without its visionary leader. It's the ultimate paradox. Shareholders who vote no to prevent dilution might trigger a crash that costs them far more. So how should you be thinking about this as an investor? What is the real takeaway from this financial drama? Before I give you my final analysis, if you've gotten any value from this breakdown so far, do me a favor and hit that like button. It tells YouTube that this is a conversation worth having, and it seriously helps the channel. Okay, let's land this plane. Regardless of the outcome, this vote reveals the core tension in Tesla's stock price. It is a bet on one man. For long-term investors, the real question isn't about today's vote, but whether you fundamentally believe these Mars shot goals are achievable. Do you believe in a future with millions of Tesla bots and robotaxis? If you do, then this compensation plan is simply the cost of doing business to keep the one person who might be able to pull it off focused. For short-term traders, this is all about volatility. The outcome is less important than the price swing it will cause. But for the average investor, here's the clearest takeaway. This vote forces you to decide what kind of company you believe Tesla is. Is it a car company, subject to competition and market cycles? Or is it a disruptive AI and robotics company on the verge of changing the world? If you think it's just a car company, the $1 trillion price tag is insane, and the stock is likely overvalued. But if you believe it's the latter, then even $1 trillion might one day look like a bargain. The answer to that question will determine your entire investment thesis for Tesla moving forward. This has been one of the biggest stories on Wall Street, and I want to keep covering it. Let me know what you think of the final vote result in the comments, and if you want more deep dives like this, make sure you're subscribed. Thanks for watching.